Okay, here we go. We are live. Welcome to the weekly roundup, the Hart Investment Group. I'm Scott Goodfellow. That's Ben Hart with the funny
Hello.
smile on. I just
Hello.
realized that we both have the earphones with the cords going. We don't have the AirPods
Nope.
today. Why is that? We went old school. Is it because we're getting old, we just like the old ones better? Or what's the
We're
deal?
sticking with the vintage Gary V. He loves
Yeah,
the old ones too.
yeah. You know what? Because the wireless ones just aren't trustworthy.
It's true.
Yeah. I
They
even find that
drop.
with my phone. I plug the ones into my phone too. Such an old guy. All right. Well, on that note, speaking of the old guys, what happened last week? What did you notice? What grabbed your attention? What tickled your fancy?
Well, we're seeing central banks continue to cut rates. That's I'd say the most exciting is Swedish central bank cut
Hmm.
rates, and ECB effectively said they're going to do the same. UK economy accelerated a little bit, so it looks like they're out of a recession, heading out of the recession. The Canadian jobs market came out today. Seemed like a bit of noise around that. People were interested in what's going on there. Market seemed to say that maybe then they don't cut in June as expected, but so we'll find out updated forecast on Monday. They'll probably send it out in the daily on Monday. I still think they're going to cut in June, but jobs numbers a little bit better. A lot of people coming to Canada still. I think there's 112,000 new people in Canada last month, which is a big number. So that continues to grow, and so I'd say that caught most of the attention. And then from a stock perspective, we're starting to see some of the gold miners start to catch up on the commodity. So commodity had another pretty good week in gold, but some of the miners here I'm starting to see hit 52 week highs. So some of the miners like Heim Gold, Kinross, those names starting to touch highs, and also a couple of the energy names like CNQ and such starting to catch up a little bit there from where the commodities have been.
Amazing.
Mm-hmm.
Sounds like bustling week. Was it bustling?
Was a bit of a bustling week.
Was
Earnings still
actually.
coming out in the US, though. Stocks
Okay.
are a little bit choppy.
Okay. A
Yeah.
little bit of chop in the market, as they say. As they say on the street, a little bit of chop in the market.
But
All right. So, what do we what's in the crystal ball? What are we looking at for next week?
you want to hit the slides and then we'll jump into that and see where it takes us.
Oh yeah, I jumped oh man. Hey, this is how busy we were this week. It's just
It was.
I'm off the flow. All right, yeah, let's get the slides first, then we'll hit the crystal ball.
Sounds perfect. Let me know when you can see it.
Yeah, it
See
looks
it?
good. Looks good.
Looks good. Okay. Yeah, so just really from a media perspective, there's lots of talk when I see, at least on the headlines, they say there's lots of, we'll say, cash on the sidelines. So I thought this was a chart that really kind of showed most of that money's come out of the system now. So when you see Powell speaking about rates, and about 2 weeks ago effectively said that they're done raising rates, even though there was some indication they thought they'd start to raise. So you started to see the futures market price in something like 50 basis point cuts this year. So we'll see what happens from that. So I thought this was worthwhile to think about it because rates are elevated, as we know. You can see people are now below the amount of savings they had prior to COVID, which is, it's been a long time to work through that way, particularly in the US, because they're not really susceptible to interest rate changes because they buy 30-year mortgages. Interest rates obviously don't change. So there's a lot less pressure on the consumer in the US that way. But now we've seen them go through, and there is not a lot of cash on the sidelines like you might see in some of the headlines. The other one, I don't know, we talked about this, Scott, a few times on and off, just about the buildings selling at ridiculous levels relative to what they used to be. I think it was Baltimore. We saw the last one that sold something around, 80 million in 2021, selling for, 1.5. This one too caught my attention today. Tallest building in Fort Worth. In 2021, that's 3 years ago, the building sold for $137.5 million, just foreclosure sale at 12. So questions I'm starting to get from people are like, who's writing off all these hundreds of millions of billions of dollars in commercial real estate? The answer is I don't know yet, but I think it's lurking below the system somewhere. A lot of private credit, private equity that I think we need to pay attention to because they never mark their books. I mean, I guess technically they're supposed to mark their books once a year from the accounting firms give them a net asset value of their buildings, but technically they don't mark them very frequently. So these types of events are worth paying attention to because somebody's actually writing this money off. Maybe it's the banks, but we'll see. Probably not in the US though. So that's something that continues to grab our attention. What is this? This is the Apple Vision Pro. Not sure if you've tried it yet. I have not, but it looks pretty cool. I thought this was a great look at what actually goes into it. So when we think about our iPhone and a lot of the different devices that we use, you don't actually always realize that there's a lot of other companies that have secondary benefits from supporting the Apple brand. And so this is a cool look. Texas Analog Devices, and Micron, all the different components that go into these businesses. So as you start to track on what's working, what's not, some of the other businesses are worth paying attention to seeing how they do and how they're going to do based on the success or lack thereof of Apple going forward. So I thought this was a cool picture. Just look at the inputs going into the Vision Pro. That's it. Kept it to 3 today.
Great job.
As per my mandate.
Great job. I like it. Just did I lose the volume on? Oh, there you go.
Yeah.
Yeah, just going back to the real estate numbers there. That's unlikely to happen in Canada, isn't it? I mean, we don't see corrections like that here. Typically.
The write-downs on the commercial buildings.
Yeah.
We've seen most of the commercial REITs get cut in half from a price perspective. And so I think there's been a big chunk of that already priced into a lot of the publicly traded REITs anyways. And so some of these buildings are getting marked down, but most of the things I've seen are US. Like I know CPP walked away from their building. They had some ownership in New York City. They had put in 77 million. They just walked away from it for $1. So I know that most of it's been US based. I haven't seen as much of it here yet, but certainly over the next 24 to 36 months, there's a lot of properties rolling over from financing perspective. So I'm sure they're all quite anxious to see rates lower, but some of the REITs, as I say, the big ones are marked down 50 and the small ones are down 70, 80%.
Okay, great. Well, is it time to break out the crystal ball now?
Sure.
Okay,
Yeah.
Good. I got a little too excited there.
Yeah.
All right, what are we looking at for next week?
Yeah, I mean, I think that's a great point just about the different areas that can benefit from lower rates. And so as we start to see rates probably peaking, at least all of the central banks around the world, with the exception of Japan, are in the cutting rate cycle. And so some of the things that'll have a tailwind would be REITs and telcos and any of these kind of CapEx heavy businesses. So we'd be watching those businesses kind of over the next 6 to 18 months. But shorter term market has been a little bit choppy to sideways this week. So we'll see what happens next week. We start to pick up a little bit. But I think as we continue to watch earnings in Canada and the US, there's some potential opportunities there. NVIDIA's earnings is coming up in a couple of weeks, and that'll be an important one to watch, certainly from a tech market perspective.
Gotcha.
Yeah.
Okay, just to wrap up there, now we're kind of through tax season. Anything that we should be telling the clients to look for, or?
So the one thing that I've got and continue to get lots of positive feedback around is the present when we did the annual presentation, we had trust services as one of them. And so, yeah, we've had more conversations about that than I anticipated. So, if you're interested in having a conversation with Chantel or our trust team, just to know about what they do or how they might fit into the will and the estate, there isn't a cost associated with that. It's just more of the point of, could this fit? Would this be something that works for me and my family? So we've had more conversations than I anticipated. And so if you're interested in that, let us know. We can connect with Chantel and have a quick meeting, just chat about some of the pros and cons of our different trust and executor services.
Awesome. Great point.
Yeah.
Okay, well, at that, we'll wrap it up. Start the weekend. Happy weekend, everybody, and we'll see you next week.
Sounds good. Take care.